Good morning, everyone. I'm Marina, and I'm with Martin here at the Be a Better Trader campaign for 2016-2017, brought to you by iVSAchart. Welcome all. This morning, I will talk a little bit, just a very brief touch on the KLCI, and then we will proceed to do a little bit on the education on trading, which today I would like to concentrate on stop loss. Okay, for the KLCI, I will use my pen now and just show you where our CI is. Okay, now yesterday's closing for the CI was around 1647. This morning it's about 1651 now, so we should be around here at the moment. Okay, around here, so we would be around here now. Okay, now we are here. Okay, so you can see the CI is already moved above the 50 moving day average and is moving towards the 200 moving average. Our support, there's a very strong support here at around 1617 area. Okay, this I will just draw. Oops, so sorry about my drawing. It's not so good. It's quite hard with this pen. Not used to it. Okay, anyway, I think you all know what I mean. The support is around that area, and we have now moved. In fact, 1651, as I've drawn up here, is already here, moving towards. Now, if there are more good news coming out, especially about election, we have election rumors. Oil's down a little bit today, but on the whole, it is at around 54, 55, which is holding quite stable. And our US dollar, our Malaysian ringgit actually have strengthened against the US dollar in the sense that it was down so low at about 4.4, 4.7, 4.8, and now it's only about 4.48, 4.5. So in that sense, I think there's a little bit confidence coming in, and perhaps with the new year, more people would be starting to trade again, since there are a lot of stocks which have fallen down quite a bit and a bit cheaper now. So a good time, to go bargain hunting. So that's the CI at the moment. I will move on to the next slide now, which is let me erase this all these drawings first. Okay, the next slide is the four market phases. Now in IBSA is Intelligent Volume Spread Analysis. Volume spread analysis is founded by, it goes back actually starting from Richard Wyckoff, who was a very famous stock trader in the early 1900s, and the spread comes from another Sifu, Ton Williams, who used Wyckoff's methods to trade. So he concentrated a little bit on the spread of the bars and incorporated it with the volume analysis of Wyckoff, and now we have IBSA, which is volume spread analysis. Now, Wyckoff says that there are four stages of the market, four phases of the market: accumulation, markup, distribution, and markdown. So in every chart you can see, there's accumulation here, markup, distribution and markdown. Okay, this is when the smart money start to buy cheap when nobody wants to buy anything and there's a lot of bad news. And then after they have cornered the stock and bought everything, they will push it up. And this is also where everyone starts to come in stages. In IBSA with our members, we have signals where we go in around here so that we can catch it early. But for some people, they will join along the way, the retailers, and up here will be the climatic buying, where everyone, the tea lady, the taxi driver, everyone will start jumping in here. And this is when the smart money will start distributing. When they start distributing, usually the distribution is short. The accumulation here can be quite long on different charts, but the distribution or the starting to sell by the smart money usually is short because they don't want to wait for so long. They just want to dump it as fast as they can. And then this is the part where those people who come in here, they get caught. But all the way it will go down before the next cycle comes up again. So we will go to some charts now and have a look. Like I said, I want to talk about stop loss today, not all the time about just charts going up. I think it's good to show that, you know, the whole market, sometimes you get counters that are not so good and do not work out, and there are some counters that run. So today we go on to the stop loss part about trades that don't work out so well, and I have some examples for you from our IBSA charts. Okay, this chart is one counter called SLP Resources. Now, I'm sure some of you might have heard about this SLP Resources, but this chart is, let me see, when it started to come down, that was around sometime last year, they started to dump. Okay, there was accumulation here. So this is like the what I was showing you about the market stages. There's accumulation here, okay? Usually they will accumulate on low volume. After accumulating, like just now when you saw the push up into stage 2, they will start pushing up here. And then, like I said, you see, the stage 3 where they distribute is usually very short only. Very short, and then that's when they start stage 4 to sell down, okay? Now in our IBSA, we have an inbuilt trailing stop loss called our ATR stop loss, which is proprietary to IBSA. If you are trading and you do not have this and you are already quite familiar with the market, you may not be really sure whether this is a rest and the market's going to go up, or maybe it just comes out. Hold on, there's something wrong with my pen. I will have to go back to the chart, the previous chart. Sorry, the chart, the two charts before this actually. Yes, this is the one. So we have the inbuilt stop loss. Let me go to my spotlight. Okay, so around here, if there's this little down bar, if you are trading without any signals, just on a blank naked chart, you'll be just wondering, oh, maybe this a little bit of a pullback for the day, and you might be you might be holding on to the stock as people normally do. But in IBSA chart, which is a chart that we use, the IBSA chart, there are already quite a lot of signals here. They're already showing you that, you know, what we call this sign of weakness. If some of you have attended Carly's talk, she talks about sign of weakness. Now we have already sign of weakness here when they're distributing. As you can see, when the market is pushing up and there's not so much distribution, there's no sign of weakness. But up here, With the volume coming up, that's when they start to sell a lot. So already starting here, and once our ATR shows that the price is already closing against the ATR, close below the ATR, our members are given a rule and they get out. Now, if you do not get out, you just see what happens, right? All the way down here, and then it's just going, it could be a phase, starting of phase 1, but we do not know how long the phase 1 is going to last. And until today, the stock is still languishing around this same level. So it's very important to cut loss. As I will show you also in the next chart, the same thing about cutting loss as well, and about using our members using our ATR to stop loss to help them along. So I will go to the next chart now. Okay, this chart is a chart called Guanzhong. Now, I've brought up this chart, and I'm showing you actually almost 2 years so that you can see. Again, you have this accumulation phase, you know, the markup phase, and a very, very short stage 3 distribution, and then all the way down, you know. Okay, the reason why I brought up this chart is because I know someone, an acquaintance, who attended a talk by one of the broker houses recommending the top stocks of the year then. That was in August, and they were recommended, on that day, they were recommended to buy. I will go to the next chart now, which is a close-up of this one so that you can see it more clearly. Okay, this is the part that we were at just now, where I was pointing when they were recommended. So when the big broker house recommended to buy one of these top 10 stocks for the year, people went back and then they bought on the next bar. Now on the next bar, you can see the stock is already coming down, and then they start dumping already. So there is a signal to get out here if unfortunately, you know, you have bought at the top. Like I said, when all the taxi drivers, the tea ladies and all start to talk in stage 3, that's when everybody buys, and that's when the stock is going to come down soon. So our signals already here to get out. If you do not get out, just see what happens. But going back to this acquaintance, he asked, what am I going to do? Because I was recommended and I bought up here. So I was telling him, this is the support here. If this stock breaks the support, then it's going to go down some more. And he wanted to know, should I average down? Now in IBSA, we never average down. When the stock is coming down, it's like catching a falling knife. Don't waste your money averaging down. In fact, you should use that money. If you've got $10,000 worth of that stock and you want to put in another 10,000 to buy some more shares to average down, you know, you better take the 10,000 and go and look for a stock that has potential to move and make some money back. Because if you do that and you tie it up, you never know what will happen. If you do that, look, it goes down even further, and all that time you have to suffer. This is like 1 year. And the most it came up to was just actually back to where the support broke down, you know. And now it's languishing at this point, which is about 105, 107, and maybe in this range it will be going up and down around this range. So that's the point that I want to make, is that you should cut your losses whenever you see a stock is not working out, and move your money to a stock that's potential to move up, and do not average down, because you'll be tying up your money. This is what can happen. If you know the market stages, like I briefly showed just now, you know, you got stage 1, stage 2, stage 3, and stage 4, then if you look at it and you know that there's already a stage 3 and it's coming down on stage 4, then don't hang on to your stock, you know, just cut loss, sell it, and take the money and move on to another potential stock that is, say for example, accumulating at stage 1 and going up to stage 2, or just starting stage 2. Now in iVSAchart, we have screeners that will show us what stocks are, just breaking out of the stage 1. We have rules for our we have rules for our members to enter at certain stages, and yeah, we have rules for our members to enter at certain stages, and every night you can run your screeners and you can find these stocks, and you can run them at certain when there's a signal to go in. So no need to hang on to all the losing stocks. I know it's very hard to cut loss, but that's why I want to touch on it today, just to show some examples of some stocks that if you do not cut loss, your money is being tied up and you can't do anything else with it, okay? Because for most of us, sometimes we have a limited capital and we can't do anything else but just watch as other stocks go up. It's like one of my old sifus in Bill Womain used to say, there's like money lying on the street and you just look at it and you don't pick it up, so it's just like you just look at all the stocks, they are running and you actually don't have money to buy them. So cutting loss is very important. Do not forget that. We have to change our mindset. We have to psych ourselves up and tell ourselves that we can use this money for something better instead of just holding it. And I think everyone agrees with me. Whenever it comes to a stock that's not working in our favor or going down, we always say, oh, it's okay, never mind, let's wait till tomorrow. Most probably it might turn. And then when it goes up by a few cents, we are so happy. See, it's going up. But then it just goes up a few cents for maybe 1 or 2 days and it continues its downward trend. So the other way is also to look at the trend during the markdown stage. If it's going down, just get out. Now, the approach to trading, the approach is not to limit the choice, but to provide a broader choice. It's appropriate to have choices that are indulgent and others that are better for you. That is a quote by Richard Wyckoff. So I would like you all to just have a think about, your approach to trading, what else you need to do to bring it to another level, to find maybe better tools, better strategies, to help you along. At iVSAchart, we have, I think if you all are familiar and you've attended the webinars before, we have a lot of signs of strength and signs of weaknesses, embedded stop loss, like I said, and which is easy for you to follow to make your decisions more accurate for you. Now we have someone asking about Prestar, so we will review this stock. We will bring up Prestar and we will review it. Okay, Prestar, at the moment, Prestar is, I think Prestar is doing very well, right? If, according to IBSA, if it's in our screeners, our members would have got in here, okay? This was a signal to go in around this area, following our rules and our trigger points, okay? And the stock is doing very well now. It has a resting stage and then it's just moved up to the next level, the step ladder, and it's moving up to the next level. So the volumes are healthy, and if you had got in around this area, Roslyn, you should still be running your profits. Maybe at a certain percentage you take part profit and then you run the rest of the profits until there's a sign for you to get out. But if you haven't gotten in yet, in our IBSA rules, the price is a little bit quite far from the what we call our ST line. So if it's quite far from our ST line then the risk to reward ratio will be less. So of course the logic is the higher it goes, the less profit, because you don't know when it will reach stage 3. It may reach stage 3 earlier than you expected, and then there's not that much profit. But having said that, this seems to be the start of a run of stage 2. How far stage 2 will go, we do not know. Okay, every stock is a 50-50. So if you want to get in here, you have to take into consideration your risk to reward ratio. So if you are satisfied with a smaller profit, then by all means, I think this stock you can always try and buy it on a pullback or when it goes sideways. So I think this is all that we have for the moment. It's already 10:55. I hope that you all have enjoyed this little session this morning, and we hope to hear from you all. Please WhatsApp us or email our sales team, our support at the IBSA, if there's any other queries that you'd like to make. So I wish you a Happy New Year, belated Happy New Year, and see you all again. Thank you.